Hey, good morning, everybody. This is Lachendro. I am one of the annuity sales directors here at Insurance Agency Marketing Services. And it is a pleasure to have you all on with us. Would love to introduce you to my buddy, David Downing, senior internal over at F&G. He's got this amazing concept. Bonds is a big topic out there right now, and indices going up and down and what the future brings and what we can do about it. So he's going to give you the rundown on his concept with that. I'm really excited to have you all hear about. It's why we have this webinar today. There are some folks that are on here that I do not recognize the names, and for those that this is their first connection with us here in the IAMS family, welcome aboard. So excited to get to know you. I'm going to show you a few slides, just a little introduction on IAMS, what you get with our partnership here at IAMS, all of the different resources that we provide for you, all the perks you get. And with that, I'm going to go ahead and get started so I can turn the show over to Dave. Say hi, Dave.
Hello, everybody.
All right, we'll get going. My mouse works. There we go. All right. So when you first join that, I like to call us the IAMS family. When you join the IAMS family, Steve Murray wants to let you know how much he appreciates you giving us a chance to grow your business and hit those goals that you have. So with that, we are going to give you back some marketing dollars, some marketing opportunity that doesn't come off your commission. It's just literally coming from our pocket to yours. And we all know the cost of marketing is not cheap. So every little bit helps. You can go anywhere from, the first 6 months of whatever production that includes life business as well, not just annuities, but your 100,000 level. To give you an example, you're looking at $750 in cash, or something equivalent to that. Now, postcard mailing might not be exactly what fits your needs. So when you work with your director, your marketing director, we're going to talk to you, get to know you, get to know what your marketing needs are, and then we will fit you into some sort of a creative solution. We can apply these credits to that. So if you ever have any questions on how the new producer bonus works, just give us a holler. Okay, no better compliment in our industry than a referral, right? You love them, well, I love them too. But we are going to show you our appreciation on referring an agent over to us by giving you an override on any production that they write, whether it's Life Target, Index Annuity, even MIGA or SPL. So here you can see what the basis points are on that override. We do send those checks automatically out to you on a quarterly basis. So if you ever have any questions, or if you have somebody in mind, a partner or a buddy that's also in the business that you think would benefit with the IAMS family and our partnership, jot their name down, shoot them our way, call the office, have them call and ask for whoever, and we'll make sure that we get that referral bonus set up for you. Now, keep in mind that does not shave anything off of your referral and their commission. They're still set up at the regular commission levels, but it literally comes from our pocket to you as a thank you. So pretty cool there. Next, our back office support, some of the best in the industry, in my opinion. Basically, bottom line is we want you to do what you do best, and that's be out there in front of people. We don't want you on the phone with a carrier for an hour waiting for, status, or trying to figure out how to do an illustration, or which product might be the best fit. We let us do all of that stuff for you. That's busy work, but let us do that stuff for you. Your job is to go out there, make those relationships, try to help as many people as you can with their financial situations and solutions, and then let us do all that back office stuff for you. So that's really what keeps a lot of our agents here and keeps them, continuing to stay with us for 20 plus years. It is our back office support. Part of the support that we provide all of you is our IAMS Inc. website. So if you don't already have this website saved to your browser, do so now. It is www.imsinc.com. On this browser or on our website, you have a plethora of resources. Some of those resources include term quoters. You have access to our sales resource library. In the sales resource library, there are fact finders, and those fact finders could be anything for a fact finder for a business owner, or maybe it's just a life solution, or just a general fact finder, or an estate planning fact finder. We've got all sorts of fact finders on there. We've got one page concepts you can slap your name on and then send those out to your clients or prospects. We have presentations. I mean, we have another one I'm going to get to, Firelight, which I'm sure David is going to want to chime in on his opinion on that. And then access to our, annuity rate watch. I mean, it's just, if you haven't gone out there and played on our website yet, please do so. If you want me to give you a tour of all the resources and how to get to those, let me know. Happy to do so. I mentioned Firelight. Okay, so Firelight, for those of you that aren't familiar, Firelight is an e-application program that we have on our website. So once you're contracted with IAMS, you are qualified to go ahead and register for Firelight. I have detailed step-by-step instructions on how to do that. If you want those, let us know. I'm happy to shoot those over to you. If you're not already registered on Firelight, please do so. But you can see that FNG is one of the carriers that we have on Firelight. With Firelight, your NIGO, percentage goes down quite a bit. In good order apps go up. So not only that, but the turnaround time on suitability, the turnaround time on the whole process and the app process goes much quicker. David, do you want to chime in? And from a carrier standpoint, what are your thoughts on Firelight and e-app versus a paper app?
Yeah, happy to expand on that, Lisa. I think anytime you can minimize the amount of times you have to go back to a client is going to be a good thing. So having safeguards built into Firelight that'll ask you additional questions and get the clarity that the carrier needs the first time around, so you don't have to go back to the client, is a good experience for everybody. So I know historically the industry has been a paper app, but if you can build it into your practice, buy yourself an iPad and start to do the Firelight app like you would a paper app, I think it's going to be beneficial for you and your practice.
And then there are carriers out there that won't accept anything but an e-app. And David, I think there are a couple products with FNG where it has to be submitted via e-app.
Yep. So if you're submitting a multi-year guarantee or a MIGA product, it's got to be done e-app only. Is the only way we'll take those applications.
Yep. So we're seeing that happen more and more with carriers, switching over to that requirement. So again, the sooner you can get into the e-app game, I think the better off you'll be, saving you a lot of time from pulling the wrong forms or missing a spot on the application, or missing a transfer form. I know that happens more often than we'd like to admit. So Firelight will be your solution to those issues. Let me know if I can walk you through it. Always happy to do that as well. As we have our creative marketing solutions. Now, I mentioned, we can help you with all these different marketing options. We have our back office support. Well, we also have our creative team. And these guys are so talented. They can literally do anything from revamping your logo or helping you have a more appealing business card to ramping up your social media pages or building you a website. I've even had them put together or build a nice lawn sign for an agent that was going to do a workshop. So A to Z, these guys can provide you the resource to do that. If you're ever interested in anything, just let us know and we can get you what you need there. This is one of my favorite topics to go, and I'm doing our IAMS commercial and kind of giving you guys an insight of what IAMS has to offer and why I talk about IAMS wealth management. I'm going to go ahead and launch a poll on this, but my buddies over there are phenomenal. The back office support that you get here at IAMS is the same support and professionalism and desire to help you as the one with IAMS Wealth Management. Uh, they are very, very competitive when it comes to joining them. You know, if you're already securities licensed, if you're not securities licensed, they're more than happy to help you with that as well. Just talk to my boy Duncan Smith over at IAMS Wealth Management. He will hook you up. So yeah, that's if you're already registered and you're looking for, you know, back office support, compliance support, all of the above. They do it A to Z for you. Now, let's say you're not licensed and you have to partner with somebody that is licensed because you know that your client is asking you to get something that's maybe on the security side. Well, you don't have your securities license. Maybe you're interested in getting one down the road. Maybe not. Well, IAMS Wealth Management can help you there as well. The big difference is that we're not going to touch any of the other fixed business. Zach Rieg will just help them on the security stuff and partner with you on helping you with the whole solution on the securities and annuities or life or whatever it is. So you're not cutting your commission in half with somebody else that's securities licensed on all the stuff you don't need their help with. Zach is just going to touch the stuff that that you're not licensed to do. Then, if you do decide to get licensed, here I think is the best part. Zach is going to, or IAMS Wealth Management is going to transfer that client back to you once you're licensed. I don't know any partnership or anybody else that'll do that. If you get your license, they're keeping whatever clients they helped you with prior to you getting licensed, right? Well, not IAMS Wealth Management. They literally transfer those right back to you. So I think that says a lot about them. I appreciate people answering the poll here. And with that, I'm going to go ahead and move on. Next, we have our academy. We just wrapped up our last academy last week. We actually had that out by David in Des Moines, and it's basically a 2.5-day training. So we fly you in, we take care of all the bills, your food, room, board, travel, everything. It's on us, and then you hear from some of the best in the industry. You hear about some very you know, not insurance 101, but more advanced concepts that are working really well in the industry as well. And the goal of these things is really for you to walk away with tools and ideas for you to grow your business and that partnership with IAMS. So if that's something that you're interested in, you can go onto our website and register for the next training that will be in June. And we are filling those seats pretty rapidly. And we should have another one towards the end of the summer and then another one mid-fall. So we do about 4 or 5 of these a year. Like I said, we've only have so many spots. So if you're interested in an academy, definitely go onto the website and get registered. Next, we have trips too. So our next top producer trip is going to be the Seaside Sanctuary in South Carolina. So takes 4.5 million points to qualify. That does include life business. It's an 18-month qualification. So we're kind of hitting towards the middle end of the 18-month period on this trip. This trip you have until the end of this year, December 31st, 2023, to qualify. Let us know if you would like to see where you're at in your qualification or if you'd like more information on how to qualify there. Last one, guys, we are a marketing organization. So clearly we're going to have Facebook and LinkedIn. If you haven't already gone onto one of our pages, please do so. It'll be, there's a lot of good stuff on there that you can share. Always keeping you in the know in the industry. And with that, Mr. Downing, are you ready for me to switch over to your screen?
Absolutely.
Sweet. I'm gonna switch it over to David. I'll let him do an intro on him, and then David, you got the mic.
Cool. I'm assuming that you can see my screen here, and I'll try to do both. I'm not sure if I can do webcam and PowerPoint. Can you see both?
I see both.
Cool. Yeah, I appreciate the introduction here, Lisa. Always excited to work with IAMS and IAMS agents. Today, I want to talk to you guys about the Accelerator Plus and some of the reasoning behind picking this product. So last year, 2022, we did give or take $1 billion of premium in this product. And in 2023, this is our fastest growing product. And it's because as a company, as an industry, we're touching new agents and we're touching agents that are in a different space. So Lisa on the invite today sent out a bond alternative. And I was in New York a month ago with some of our agents, and one of our top agents was talking about how he's using the Accelerator Plus as this really cool bond replacement or bond alternative. So that was the premise behind this presentation today. And when it comes to today's agenda, Lisa, I just want to confirm the screen has in fact changed to the next page.
Yep, we're with you.
Perfect. Awesome. So agenda for today, I'm going to give you a brief overview, F&G, who we are, where we've been. Then we'll talk about the Accelerator Plus, what drives the growth. We'll talk about the income side of things. Then we'll talk about the package, right? The concept that I took from that agent, James, and something that you guys can quickly utilize in your practice today, especially if you are in the practice of selling bonds. So really excited for this concept, excited to get there. But when it comes to F&G, that's myself on the right-hand side, David Downing, Senior Internal Wholesaler here. And to the left side is my boss, Tia Stanley. So when you're out and about, when you're at these IAMS events, chances are when you're looking for F&G representation, it's going to be myself or Tia Stanley there. We're going to be the ones that partner with Lisa and your marketer at IAMS to take the best care of you here at F&G. So in F&G, we want to earn your business, right? I want to come to you with concepts. I want to come to you with positive news. And that's really what we're focused on for 2023 is being able to give you a concept that you can take and run with and easily implement into your practice and hit the ground running, right? Think about things in a different way versus just talking, product or things like that. We want to be able to bring value to your practice. So we want to earn your practice here at F&G. One of the things that we've done to make it easy to do business with us is continuing to invest in our staff, right? So when I started with F&G 2.5 years ago, I was around employee number 300. Ending last year, we ended with 850 employees, still able to capture a number 2 in overall customer satisfaction from J.D. Power. This is among all annuity carriers. So you think about some of those household names, household brands, we're actually able to outperform them in overall customer satisfaction. So something we're really excited about is this award we received from J.D. Power. It's not because we don't have premium coming in the door. In fact, we had another record-setting year as far as premium goes, but pretty cool to be able to grow at the pace we're growing at and not have some of those growing pains that other carriers may have experienced. So number 2, overall customer satisfaction. That's from the start to the end, right? So you submit an application, you may have to go back to the client for some corrections, all the way to client wants to turn on income, take distributions, RMD. This is the whole process, right? Number 2 overall for customers. So pretty cool award, something we like to talk about and keep you all in the know about. Now, when it comes to F&G, we've been around for 60 years, right? We've been in the market for a long time. But when I think about F&G and who we are today, I really want to highlight the last 5 years, right? The last 5 years really is going to dictate the F&G that you all know today. And I start in 2017, and we formed a relationship with Blackstone. They've been a really cool partner of ours. It's been really great to get to know some of the people at Blackstone. And if you didn't know, I learned this when I was in New York. Blackstone owns all of Super 8 real estate. So pretty cool alternative asset manager. They've allowed us access to alternative capital that's allowed us to continue to offer competitive and sustainable products. Part of that relationship, we're actually able to gain the capital to be upgraded to A- by AM Best. 2020, we were purchased by F&F, renamed from F&G Holdings to F&G Annuities and Life. Upgrades came A- across the board, and lots of good things happening since then. But one of the things I want to highlight for you all is as we continue to see banks collapse, we continue to have questions about financial strength. And NAIC is the governing body that basically governs as F&G takes in premium, we have to keep XYZ on the books, right? So you take in $1, you got to keep 50 cents, whatever it is. F&G actually keeps double the required premium on hand or double the required cash in the bank to satisfy liabilities. So I think that's a great talking point when you think about those clients that have cash in the bank. They're kind of starting to worry about, what's going on there. Well, F&G A- rating, actually just upgraded by AM Best from stable to positive, and we keep double the required cash on hand as comparatively to some of our other competitors. And another really cool thing, end of last year, partial spinoff, F&G is now publicly traded, which means that your client and you access to all of our financials, liabilities, etc. So if you have a client analytical that really wants to get into the weeds with F&G and our balance sheet, because we're publicly traded, that's all available to you and to them. So really excited about things, where they're headed. 2021, we launched pension risk transfer, although not relevant to this conversation, but really relevant to the amount of assets under management we're able to gain. We're essentially going out, buying pension plans, and then honoring those requirements as far as lifetime payouts, things like that. So really cool, lots of stuff going on here at F&G over the last 5 years, and excited for the next 5. Now, just to wrap up the package of who F&G is, where we are, et cetera, in this space that we all play in this IMO annuity channel, last year we ended number 4 in terms of overall sales. Pretty cool to be touted as a number 4 in sales and number 2 in overall customer satisfaction. Usually those things don't go hand in hand, but really awesome, really great growth going on here at F&G. Oftentimes you may see F&G as a really small company, but just know we're growing, continuing to grow, continuing to stay aggressive in our product offerings and sustainable in our long-term product offerings, with the number 1 focus being on the client. Now we'll move to the second part of the agenda today, which is the Accelerator Plus, what we all came to learn about and know about. And we'll start today with the horsepower conversation, or the growth component of this product. But this really is a product that's the best of both worlds. One of our top selling products for a reason, and it's because it does a lot of stuff really good, right? So when it comes to best of both worlds, 7% bonus, that's a true account value bonus. Depends on state variation, of course. 5% performance multiplier. You might be thinking, what does that mean? Not to worry, I'll clear the air on that in a little bit. And then in Lisa's invitation here, we talked about bond replacement with living benefits. Part of the living benefits is going to come from that impairment multiplier and the access to account value in times of need, right? So if the client needs access to their account value, home health care, nursing home care, terminal illness, free partial withdrawals after the first year, they've got it here, right? All of that available for a 1.15% fee. And oh, by the way, they have access to some of our best index offerings. It actually has the most robust index offerings of any of our products. And I think it's really interesting. We do these interviews every so often with some of our top agents. And one of our agents in Florida, her and her practice sell a tremendous amount of this product every year. We're talking about north of $20 million in this specific product. And I said, what is so attractive about this product? And she said, it does everything really well. But one of the things that she really liked is the ability for the client to access their account value in times that they really need their money, right? So we have the 10% penalty-free withdrawal, but we also have home health care, nursing home care, terminal illness care. So if they have any of those things going on, they have full access to their account value, surrender charge free. So when she goes into an appointment and she's sitting down with a client, she's talking about this product and all the features, she starts with that, right? Because oftentimes people think, oh no, annuity, can't access my money, it's locked up for 10 years. And she says, look, in times that you really need this money, you go into nursing home care, you have a terminal illness, home health care, we're going to give you full access to your money. And if you just need something to fill your coffers while something's going on, after the first year, you can take up to 10% of your account value, penalty charge free. And that's how she starts her sale here. So I thought that was interesting because it's often maybe understated or missed in all the product features, but it's pretty cool for your client to have access to their account value when they need it most. Now we'll talk about the horsepower. That is the robust index offerings, right? So we have that bonus, but then
Hey,
we have
David,
this really, oh, go ahead.
can I interrupt you just for a moment? So, what is the process for them to access that money? Is it just two of the six ADLs, a physician statement? What does that look like?
Yep. So it's going to depend, right? So if it's nursing home care for this specific portion, it's actually going to be a confinement rider. When we talk about the impairment multiplier, that's just a 2 of 6 physician statement. So it depends on which way we're looking to utilize the benefit on the product. Did that answer your question, Lisa?
Yes. I mean, that's something that a lot of agents like kind of want to know a little bit more about. What does it take? Do they have to go through underwriting? Some of those things are concerns, when they're looking at these writers, which a lot of agents are. So just, a little in depth on that aspect of it and how easy it is to access that is something that they like to know.
Yeah, and that living benefit that you highlighted when we're talking about this comparatively to other products is really going to come from that impairment multiplier. And I've actually seen several of these go paid. If the client's looking to utilize that benefit, we just need a physician statement that says they have this impairment, it's expected to be permanent, and right away we begin to pay that benefit. So it's really easy for your client to access that impairment multiplier benefit, as well as some of these other benefits we're talking about. This isn't long-term care or something that we're going to make them jump through hoops on, because this is an indemnity product and this is their money. We want to get it to them in the times that they need it.
Yep. I think that's really important for y'all to take back on, as well, and keep them in your back pocket, because that's what's, long-term care policies and some of those other benefits, they have a lot of different restrictions. So with F&G, they're removing those restrictions and making this process a lot easier for you, but not only for you, but your client.
Yeah, good call out. Now, when it comes to the horsepower or the growth indices, as I mentioned earlier, the Accelerator Plus has our most robust index offering, right? You're not going to find a fixed index annuity within our portfolio that has more index options for your client. And it's interesting because I was in New York a couple months ago. We were with all our investment bank partners, and none of them were rallying for all of the premium to be allocated into their index. Each one of them were saying, diversification is going to be key moving into 2023 and 2024 as we go through volatility, as we go through a lot of challenges are headed our way as a country. So really having the ability to diversify within a fixed index annuity is going to be huge. And it's definitely really changed and revolutionized our industry, because if you look back 5 years ago, you're selling a fixed index annuity and you had an S&P cap and that was it. Well, then look what happens when the interest rate environment goes low, the S&P caps drop, and there's really no options for your client. But having the ability to pivot in times of low interest rate environments is really what the Accelerator Plus does really well. So we'll talk first about the balanced asset 5 and 10. These are quickly becoming our top selling strategies, not just with this product, but in all the products that it's offered on. It's because of the simplistic nature, right? It's 60% iShare core S&P, 40% iShare Treasury bond. It really offers your client the ability to access an uncapped S&P strategy, in my opinion. And when you add the balanced asset 5 and balanced asset 10, the difference between the two is balanced asset 5 5% volatility, balanced asset 10% volatility, right? So in terms of baseball, you have one index that's doing this low volatility, consistent return strategy. On the other side, you have that 10% volatility that's taking those high swings, swinging for the fences. So when you combine these two strategies together, it creates really nice diversification for your client. But what I love the most is it's really simple to explain, right? It's trackable, easy for the client to digest. It's 60% iShare Core S&P, 40% iShare Treasury Bond. And over the last 5 to 10 years, both of these indexes have performed really, really well. And oh, by the way, the balanced asset 5, 1 year and 2 year strategies are guaranteed at 100% minimum participation rate for the life of this contract. So we like the S&P caps. They're high. They're 9% right now. We go into that strategy. We go into a low interest rate environment 5 years down the road. You're going to have a lifeline through some of these indexes where they have 100% minimum guaranteed par rate. So pretty cool stuff. And then we'll talk about one of our additional offerings that's the newest offering on this product is we're continuing to innovate and add index options. I love what we've done with the Global Factor Index. This was brought to us by Goldman Sachs. They've been a really great partner. But I love the timing of this because if you ask any investment bank, if you ask Goldman, you ask Barclays, you ask Blackstone, BlackRock, they're going to tell you that they're projecting over the next 10 years for global equities outside of the US to outperform US equities. So having the ability for your client to capture some of that upside outside the US is pretty cool, especially considering, like we talked about 5 years ago, all we had was the S&P. Now we're able to diversify within this fixed index annuity where we're offering global indexes into what traditionally only had was a one-trick pony, right? So, but again, this index offering 100% minimum guaranteed participation rate for the life of the contract. So it's pretty cool to be able to offer that. It may not be the play we're looking at today, but in 2 to 3 years, the ability to pivot into something like this is really awesome. Now, of course, timing can be everything, right? So we rolled out this index. What happens overseas? Russia goes to war with Ukraine, drove the price of gases and commodities up and faltered their economy. But it's a really great option for your client, whether it's today or down the road, to diversify within the Accelerator Plus. And then, of course, we have our traditional offering. That is the Barclays Trailblazer. This has been our, I'll call it our flagship index, one of our top selling proprietary indexes here. And when I was talking with that agent, she said she loves Barclays and she loves Goldman Sachs. And part of it's because of the brand recognition, right? The client gets comfortable hearing that they're working with an index that is brought to you by Barclays or by Goldman Sachs. Sometimes that can alleviate some of the consumer questions or things like that. But this is going to be your traditional 60-40 blend. We have 13 large cap essentially or equity components combined with a bond component and a cash component. This is going to be your traditional index offering. When you add the participation rates that we're able to offer, because it has that 5% volatility, this thing has performed right alongside the S&P over the last 20 years. So, but it's really cool to be able to look at this product and go from left to right and really be able to offer almost every flavor your client could be looking for, right? So we have these U.S. equities, ETFs via the Balanced Asset 5. You got U.S. equity offered by the S&P, and you have this Global Factor Index. I mean, you really have the whole gamut of diversification within a fixed index annuity. And that's really the power of the story with the Accelerator Plus is we have that bonus we talked about earlier. We have those living benefits. We have a robust index offering, and we have an income story. So it's really, and I hate to say it, it's cliche, but we have this Swiss Army knife solution within this fixed index annuity. It checks a lot of boxes, right? And that's why it's one of our top selling products, is because it checks a lot of those boxes. And one of those is income. Now, when it comes to income, there's two components of this product that are working side by side behind the scenes to basically dictate the income value. So you have your traditional roll-up value, which is 5% compounding roll-up for 10 years or until the client turns 85, right? So that's traditional 5% compounding. On the other side of the coin, you have a performance value, which is every year your client defers, we're going to multiply their account value by 5%, right? So if they defer for a year, 105%, defer for 10 years, 110%, all the way, if they defer for 10 years, we're going to multiply the account value by 150%, and that will dictate their income value. They get whatever's greater between these two. So if we don't have any index performance, they're going to get the 5% compounding roll-up rate. That'll become their income value. But they get whatever's greater between the two. And when it comes to payout factors, this is banded like your traditional fixed index annuity. They can take it single or joint. And this really dictates the impairment multiplier, which we'll talk about here in a few slides. But another way to show this is you have a very conservative, we'll call it, account value there shown in blue. That's a 3% growth, right? So we get 3% year over year. There's your account value. We multiply it by the 150%. Boom, there's your income base, 194,000. And right in the middle there in your orange line, that is your 5% compounding roll-up rate. So you're getting whatever is greater between the two. That's what becomes your income benefit. So this shows really well what I was talking about there is you have two separate mechanisms that are working behind the scenes, and whatever is greater is what the client ultimately takes income off of or becomes their income base. And both are really competitive, right? 5% compounding roll-up rate or 5% multiplier. So really great offerings when it comes to some of those benefits we talked about on the index side, but also pretty strong income story. And how often are you meeting with a client that says, look, I don't know if I want to take guaranteed income, but I want to have the option to do so down the road, right? This is a really great product for that client that wants competitive growth, also may want guaranteed income, but they're also looking for some living benefits. And we'll talk about the impairment multiplier, and Lisa did a good job of highlighting that a little bit earlier. But let's say the client can't do 2 of 6 daily living activities, right? They can't eat or bathe or whatever. Well, F&G receives a note from their doctor or their licensed physician that says, Ed cannot do 2 of 6 daily living activities. This impairment began in January and it's expected to be permanent. And we say, okay, we're going to get Ed a double payment. So what does that look like? In this case, Ed's income base has grown to $162,000. That equates to a 5% guaranteed withdrawal payment for Ed. So in the case that Ed wasn't impaired, we'd be paying him $8,100 till the day he died. But because Ed became impaired, we're going to double that payment. We're going to give Ed $16,200 until his account value equals 0, right? So I want to say that again. We're going to give that benefit until his account value equals 0. So if Ed has been receiving this benefit, we're turning the corner for year 6. Ed's got $100 left in his account value. We're going to give him one more payment of $16,200. And then if Ed continues living on, we'll revert back to his original payment. So when you compare this to some of our competitors, some of the key features are there's no 5-year limit. As long as there's a single value, a single dollar of cash value, we're going to double that benefit, right? It's 2 of 6 ADL based. We're not going to make this client jump through hoops, and we're going to give them that benefit right away. I heard it from an agent. She said, I sold this client a long-term care policy and I sold them an accelerator policy. The accelerator policy began to pay out before his long-term care policy. Ultimately, the client ended up dying before his long-term care policy paid out because they were making him jump through so many hoops. And of course, by the way, we always have to highlight when features are available in California. Happy to announce this rider is available in California, not only on this product, but any product that we have an income rider on, this feature is available in California. Pretty cool stuff. If they do joint annuitants or they want their spouse to be involved, instead of being double, we drop that down to 1.5 times. Of course, subject to state availability, but pretty cool when it's available in California. Now let's look at that case study. I want to show you guys an illustration, a well-diversified illustration, and I can highlight some of the features of this product, and then we'll get into that concept before we wrap things up here today. So what we've got here is we have a 55-year-old client. I went 25% fixed account, and you know why I did that is because if you take 25% of your account and you put it into fixed account currently, that's almost paying for the cost of the rider. So it's basically becoming a free rider when you do that. We'll add the S&P annual point-to-point, the balanced asset 5 and the balanced asset 10 we talked about a little bit earlier that are becoming some of our top selling strategies. I love what F&G has done with the fixed account, 4.5% currently. Pretty great stuff. And then of course we've got what we talked about here, which is S&P annual point-to-point, which is 9.5% cap, which is pretty good for a product that has an income rider associated with it. Then we have the balanced asset 5 and 10. We're really rallying on this illustration around the S&P and on that fixed rate. Let's take a look at what that looks like. So this client has put in $250,000. At the end of 10 years, their account value has grown to $580,000. And don't worry, I'll show you the guarantees on the next page. But this is hypothetical based on past 10-year performance for these indexes, including the S&P and the fixed account. But it shows here we have those two buckets that are working side by side, right? Because we have $580,000 of their account value. That's a walkaway value if this client wants to throw in the towel, walk away, buy a boat, buy a house, do whatever they want. That's their money, walkaway value. Then we look at the performance multiplier. 150% of that 580 equals 870. That is their income base. If they want to turn on guaranteed income from this product, 43,519 guaranteed till the day they die. Or, which I see this product being sold for often, is that 250,000, we're setting that aside. This client's in poor health. They're not going to be able to qualify for long-term care. Let's hedge against some of those costs. If this client cannot do 2 of 6 daily living activities, let's say in year 7, we're going to pay him $91,000 until that $611,000 is down to 0. Pretty good stuff as far as the product goes. And then, by the way, the account value, that's paid out to the beneficiaries as a single death benefit. This isn't a 5-pay or a 10-pay or a strings attached. If this client dies, in this case in year 10, 580, 225 go into his beneficiary, and they can take that however they'd like, right? So there's really a lot of great stuff working within this product, and it really is the Swiss Army knife type solution for the client. Let's check out those guarantees, right? So we talked about that 5% compounding roll-up rate. We get no index credits, right? Because this is guaranteed, so we're not saying that anything does anything. We've still grown the income value to 407, 5% guaranteed withdrawal payment, $20,000 guaranteed till the day this client dies. Still pretty good stuff considering they started with that initial 250 and we're able to pay them out 20%. That's around 8% withdrawal from their initial deposit that's guaranteed for life. So pretty good stuff, hypothetical and guaranteed. And that guaranteed component leads me to this bond alternative concept. So if you're tuning in for the bond alternative concept, this is where one of our agents brought this to my attention about how he was selling this product. And he is a traditional RIA, right? He has 100 million assets under management, and he's a believer of the 4% retirement strategy. What is the 4% retirement strategy? You take all of your assets, bond heavy, and you take 4%, you should get the return back from the bonds. But what happens in a year like last year where your net bond return was negative 8%, the worst year in U.S. history for bond returns? And if you ask any of your major investment banks what they're thinking about bonds in the future, and the answer is pretty shaky. They're not sure. The bond market continues to be volatile as inflation continues to stick around. So what James said is check out the Accelerator Plus and how it does what a bond is supposed to do even better for your client. So we're looking at the left-hand side here, and that's the guarantees. This is basically the same thing I showed you here on this screen, but it's broken down a little bit differently. So when we look at bonds historically within a client's portfolio, what did we want as far as the yield goes? 3 to 5%, right? So with the Accelerator Plus, we have a 5% guaranteed roll-up rate. Okay, so we're already eliminating the market risk that comes with a bond. And then this client hits 65, and check out that withdrawal percentage, 5%, guaranteed for life. So we've grown the money more efficiently than what they would have in a bond portfolio, and we're able to pay it out more sustainable than what they see in a bond portfolio. So it really is a better bond alternative. And then as we move to the right-hand side, we can see the hypothetical scenarios based on past performance, and it's nothing but upside for the client, right? Because if we have any sort of index credits, we're going to be outperforming the bond because the baseline guarantees of this product already do what a bond is trying to solve for, but they do it even better. And by the way, if your practice is set up and you're an RIA and you're taking a 1% draw on your client's assets, we have a trail commission option for this product that is very competitive with what you would see from a bond portfolio. So we really are doing a better bond alternative with the Accelerator Plus with nothing but upside for the client. So if you are an RIA or a bond seller, I want to challenge you to think about the market volatility, think about where we're headed. And if we can carve out a portion of our assets under management, move them to the Accelerator Plus and offer our clients some of the guarantees that they're not getting in the bond market today. It really is a better bond alternative. So just to recap what we talked about today before I hand over the rings back to Lisa, when it comes to the Accelerator Plus, I hate to say it, it's cliche, but it really is this Swiss Army knife solution. We've got that 7% bonus or an 8% if you're selling the longer strategy. Then we also have really diverse index offerings, right? It's our most robust index offerings. It's going to be tough to find a fixed index annuity with more index offerings than what we have here. Then you add that 5% compounding safety net growth, that bond alternative story, pretty cool. We also have the living benefits. You're not going to get a bond with living benefits. So again, solving for something that the bond is doing, but even better, right? Because we have that impairment benefit, and it's going to pay until it runs out. We're eliminating longevity risk, right? Once you suck the cash out of that bond, it's gone. This is going to pay guaranteed for life till the day the client dies, eliminating longevity risk. And then, of course, access to account value, et cetera. Strong comparison to what you're getting in the bond market. So I want to challenge you to think about the Accelerator Plus. Think about F&G as your first stop for that bond replacement story. And with that, I'll pass it back over to Lisa as I scroll through some of our disclosures here.
Well, I'm going to accidentally launch a poll because I'm sure everybody wants to read the disclosures, but very great, good presentation there, David. One thing, I am going to launch this poll here before we head out. If you guys are interested in seeing an illustration on this, or maybe even having a one-on-one conversation with David, I'm happy to set that up. He has done that with a lot of my agents in the past, and hopefully I haven't scared him off enough to say no as of yet. So he is definitely there to go over this in a greater detail or more detail for you folks that really want to explore more of that bond replacement. Another thing I want to touch on here is, you're talking about fees, and I hear a lot of agents, scared of fees on an annuity. But where's that money coming from? Is it coming from a 401k account? Is it coming from some other mutual account? Guaranteed that advisor or wherever it's at it's got fees on there. Now, what is those fees doing for him? Maybe nothing. They're just making that guy even more successful. But if you could point out how this fee on this product is providing them with a multiplier, it's providing them with higher growth, it's providing them with the withdrawals and all the bells and whistles that they're looking for. That 1%, was it 1.15?
Correct. Yep.
1.15% really isn't so bad. Plus, when you're utilizing some of those strategies, David said that those strategies pay off that fee for you. So, would love to have a deeper conversation with those that are concerned with that. Just definitely select yes here, and I'll be sure to get you connected with David and myself. I'll get you contracted with F&G if you haven't already done so, and get you any illustrations if you've got that client that you're already thinking of that this would be a good fit for. Let's get that going. With that, David, I'm going to go ahead and end the poll here. I want to thank everybody again. Oh, here's a disclosure, guys, if you want to read that. I want to thank you again, David, for your time and putting this together for our producers, sharing this concept. And what's worked really well with one of your top producers is fantastic. So what's working well out there in the industry, we're always open to share those ideas and be that team that does that for you guys. So David, thanks again. With that, I'm going to go ahead and conclude this webinar. Appreciate everybody's time and joining us today, and I look forward to following up with y'all soon. Have a great day, everybody. Thanks, David.
Thanks, everybody.